Hey folks, how's it going? Thanks for watching another episode with Evan Saint-Gerard. I am Evan Saint-Gerard, surprise, surprise. And my guest today, co-host, is Angelo Gionis. Angelo, Angelo's a pro. He's been doing this for, how many years have you been doing this for?
I'm almost hitting 25 years
25 years, and you still love it.
and I still look good.
Yes, he still looks
Yeah.
good for his age.
Yeah.
Anyway, I've been doing this for about 10 years myself. Anyway, one of the things that we work with buyers, and a lot of buyers always ask, all right, I have the down payment, but they always forget to ask about closing costs. So I wanted to get Angelo over here to explain a little about the closing costs. How's that factored in? People always have questions about that. So I'm going to let you talk.
Sure. So that's a very tricky subject, and it's something that really needs to be explained to a client up front. What are closing costs? Number one. Okay. I thought I'm buying a house for 500,000. I'm putting 5% down. That's 25,000. I'm good to go. That's not really the case. That's considered the down payment. What the
Yes.
closing cost is, it factors in all the other fees that a client would have to pay during a purchase process. So let's go over some of the closing costs, and then we could break down how much that is. And since traditionally most of my business is in New York, we're going to talk about closing costs in a high state fees that has closing costs. Some other areas in the United States don't have some of the fees that New York and other states do, but closing costs in New York are traditionally higher than some of the other areas that we work with throughout the country. So when you initially start an application, the lender charges a couple fees. Some of the lender's fees, they're called the application, processing, and underwriting fee. Those are the fees that the lenders charge. So that's one of the part of the closing costs. The next part is the bank attorney, the appraisal. Appraisals what determines the value of the home. The bank attorney is the lender's attorney that prepares the paperwork and is there to close that actual loan. Then the client also has their attorney. That fee is also included in the cost of the loan. It sometimes might not be included in the closing cost. Okay. Once we have that, there's a lot of other fees that are associated with it. And the most important one is title and title insurance. Title insurance covers the property from any issues that comes up. What that means is if you have title insurance on the property and I buy a home today, any issues in the past, I'm covered because I have that title insurance. So if there's any liens, any judgments, any items that are still due, because of this title insurance, I'm protected against any of that. So it's very, very important to have title insurance.
I just wanted to add one little thing with the title insurance. You're also getting that just to make sure when you're purchasing the house that the person that's selling the house has the legal right to sell it, and no one else can come in later on. Cousin
Absolutely.
Billy Bob comes in later on. Hey, Joe didn't have any right to sell that house. We do the title insurance that covers that. Basically, Joe sold the house, and there's no legal recourse afterwards.
Yeah, and title insurance isn't absolute. Sometimes, something may pop up that is owed on the house, but the best part about that is if you have the title insurance, the title company pays for that in regards to that. So it's super important. You always need to have it on a property. Number two is in New York State, there's something called mortgage tax. If you're in the 5 boroughs, the mortgage tax starts at almost 2%, 1.85%, and it could go as high as 3-4% on the multi-million dollar homes. But let's just call that 2%. If you live on the island, it's a little less, it's 0.80%, so a little under 1%. So that's another fee associated to closing costs. And the way you could figure it out, it's based off of your loan amount. So if your loan amount's 500,000 in Queens, that New York State tax is $10,000. If you bought that house in Long Island, it's a little under 5. It's about $4,400. So it's something that you got to be aware of. Then other than that, there's per diem interest. That's when you close the loan till the end of the month. Then there's the escrows. The escrows is an important fee because depending on where you're purchasing, there's taxes on a property, yearly property taxes. And we run the gamut. right, Evans? I mean, we have
Yeah.
property tax as low as 3,000, and we have property tax as much as hundreds of thousands of dollars.
Yes, it really
But
depends
to
on
be
the
frank
price of
with
the
you,
house.
in a traditional transaction in Queens where we're buying a home for $650,000 right now. Yep, $650,000 average price of a home in Queens. The taxes are usually
Single family,
single family,
by the way.
usually between $5,000 and $7,000 right now. That's kind of where it is.
Say that one more time.
So right now, the average purchase price in Queens is around 6,500, and the average property tax per year is between $5,000 and $7,000, with higher ones in different areas, but that's the average. Now, if you purchase that property on Long Island or Nassau and Suffolk, the average purchase price again right around 625, and the taxes on the house is about $12,000 to $15,000. That's the average property tax. We just closed 2 loans today. One was $6,000 in taxes, another was $30,000 in taxes. And why is it important? That's factored on your closing costs. If the taxes are due within 60 days after you close, we have to pick that up in the closing costs. So that's an additional cost. So the bottom line is there's a lot of fees that are associated to closing costs. So we break down all the fees, we go over all of them, and there's 2 key points. And this is the easiest way to factor it out. If you're purchasing a property in Queens or the boroughs, Brooklyn, New York, the average closing cost based off of the loan amount is about 4.5%.
Okay. 4.5% of the purchase price.
Of the loan amount.
Of the loan amount, okay.
Yeah, so if the loan amount's 500,000, the closing costs are about 20,000, 22,000.
Okay.
If you're purchasing that property in Long Island, the average closing cost is about 3 to 3.5%. And the reason why it's a little bit lower is the mortgage tax, right? That's a difference of 1%. But in Long Island, where it gets a little tricky is when the taxes are so much more, you may be paying more on taxes, but that's not a traditional closing cost because that's your money. But for our client's sake, at the closing, anything they take out of their pocket, we call a closing cost, just not to confuse them, So it is a cost. It's something that's there. And if you're holding an escrow account, and what an escrow account is when you make your mortgage payment to the lender, but they include your taxes and insurance in that payment, they're going to hold a cushion or a buffer. And that's also picked up in your closing cost when you're purchasing a home.
Something I wanted everybody to understand, thank you for sharing all that, is pretty much this is all, it can be daunting and confusing, but you're going to have a professional that's going to walk you through the whole process. They're going to give you an itemized list of everything. So when you're getting close to closing, you are going to get something called a CD, closing disclosure, and it's going to have an itemized list of everything. Basically, here's where this money is going to. So here's your closing costs, and it's broken down item by item by item by item. And your lender and your attorney is going to go through this whole scenario with you, explaining exactly where everything's going to. So I don't want people to get worried. I'm like, all right, well, they told me this once, and how am I going to remember all this stuff? We will be spoken to about this.
We don't need you to remember it. We need to show it to you and document it to you, right? So when you sit down with us and we do the pre-approval and we get everything done, we'll give you something with estimated closing costs. When you're purchasing that house, we'll give you something with estimated closing costs. And the reason why they're only estimated is factored in the closing costs is the day you close during the month. That affects the per diem interest. Okay, number 2 is what month you close. That's going to affect the taxes and insurance you have to pick up and pay. So there's some factors involved. So they're always an estimate because we can't have the final numbers until the loan amount is finalized, the taxes are finalized, and that's only finalized once we know what month and what day we're closing. But we're pretty close. So when I say pretty close, within $800 to $1,000 on our estimates.
All right, and once all this information is gathered and is given to the client, again, you're going to get a copy at closing. Once everything's finished, you're going to get a CD. Do you guys still send out the CD basically 3 days before the closing?
Yeah, at least 3 days before. But when they start the initial application, also we give them what's called a good faith estimate that shows the estimated closing costs right away. So once they're approved, we could already say, hey, you're buying a house in Nassau or Suffolk, taxes are $15,000. Here's your estimated closing costs, putting down X%. But I just want to make everyone aware, if you're buying a home and this is your first time and you're buying a $650,000 home, the minimum payment you could put down on most programs is about 3 to 5%. So let's take that 5% number, just so we're all on the same page. 5% of 600,000 or 650 is about $32,000. So that's the down payment. Okay. Then the closing cost on top of that is an additional 4%, which is another, $24,000 to $25,000. So on most transactions, even at the lowest levels, you're going to need that 3 to 5% down plus your closing costs. Some of the programs we work with will help you with down payments, will help you with closing costs, but you have to apply for those types of programs.
You have to qualify.
Approved, and you have to be qualified. And more importantly, the loan amount, the area, there's a lot of stuff.
A lot of factors, contributing factors
involved. So what we tell clients all the time, be prepared for at least a 3.5% down payment and 4% closing costs. So that's 7.5%. So if you're buying any type of house, just times it by 7.5%, and you're going to know that's kind of what you need.
All right. So you need down payment money, you need closing costs.
Correct.
And just have some extra money basically for home inspections and for any other incident.
And any other money. And the one thing we always say is the last thing we want to do to a client is have them utilize every cent they have for closing costs and down payment. And I'm going to say this very frankly, I've been doing this for 25 years. We want to make sure the client's successful in the house. Okay. You can't be successful in a house if you use every dollar to close and purchase. Things are going to come up with the house. You're going to want to renovate the house. You're going to need some stuff for the house. So you need to make sure you have a reserve if anything ever happens on a house,
What would you recommend amount wise basically for someone to have as a reserve basically when they purchase the house?
Guys, it's a great question, and I'm going to just take two countries, and it is very unique. United States and Japan. Japan's savings rate has always been so much more than the United States savings rate. So when we ask that question, the question is, what should you have? What's the most realistic number? But really, what should you have, right? So what I always say is you need to have at least 8 months of reserves on your mortgage payment. So if anything comes up, you could handle that situation. So what I'm saying is, if the payment is $3,000 a month, you're going to need to have at least $25,000. If the payment's $5,000 a month, you should have at least $40,000.
Gotcha.
One thing that's really cool about the mortgage that you do, if you do need a little bit of time, or if you do need something set up, we could set up a mortgage where we close the first day of a month and your first payment won't be for 75 days. Listen to what I said.
One more time for the people all the way in the back.
Yeah. You could purchase a property on the first of a month. You're going to pay a little bit more in closing costs, but we could set it up where your first payment isn't for 75 days. And how do we come up with 75 days? Your first payment's not due for 60 days from when you close on the first of the month, and you have a 15-day grace period, right? So sometimes when we sit down with the clients and we work out their debt to income ratio and their assets and what they have, sometimes the best strategy is to give them a little bit more time before the first payment's due. So we'll set up a direct deposit on the 14th of the month, and they know they have 75 days before their first payment. For most people, what that means is almost 5 additional checks that they could save from their job. Everyone, considering you get paid every 2 weeks. So that's really helpful also. So there's a lot of strategies and tools.
Well, in order to take advantage of stuff like this, you have to work with the right people. So make sure that you find people such as ourselves, professionals, that are going to walk you through the process, explain it to you as many times as need be. And once you get that information, you know exactly what you need to do. You have a plan, you get a clear-cut plan, you know what to do. Angelo, anything else you want to leave the people with?
I really just want to say this. It doesn't matter if you sit down with me. You sit down with anybody you're comfortable with and get everything explained to you. No question is a dumb question. It's the first time you're doing. Don't be embarrassed. Take your time. When you sit down for an initial application, it really should take at least 30 minutes to up to an hour. And the reason why I say that is I need to understand everything about what's going on. And I only need to ask you for that information once. And by having a great initial application or consultation, the client feels comfortable. I understand completely what's going on. And then we could figure out the best game plan. Now, do things happen? Do people lose their job? Do they get raises? Whatever the case may be along the process. Sure. But what I say is have that initial conversation. Even if you think you're going to buy in 6 months to 9 months, it's really not a lot of time. Sit down with a lender, let them explain something to you with everything in regards to the process, and then meet your realtors. Evantz ESG is probably one of the best. So reach out to him
Thank
first.
you.
If not, reach out to a lender that you're comfortable, a realtor that you're comfortable with, and go from there. Our job is to educate, and that's what we're looking to do.
I just want to add one thing. When you're sitting down with a consultation, whether it's the lender or the realtor, be upfront about everything, because basically we can't help you unless we know exactly the whole scenario. So give us all the information, all the pertinent information, so we can put out the plans that best are suited for your particular. Not every scenario is going to be the same for everyone. So if you're upfront and tell us everything that's going on, we can point you in the right direction. And at the end of the day, we want to make sure you're a homeowner, whether it's your first one, your second one, or your fourth one. We want to be able to make sure to help you with that.
Yeah. And the worst case scenarios, you're not approved today. So we'll put you in our Moving Towards Success program. We'll outline everything that needs to be done, and you have a game plan to move towards success.
That's, you know what, we're just going to end it right there. There's nothing else needs to be said after that. Want to say anything else to the audience before we go?
No, I just want everyone to be safe and, do what you love.
And love what you do. All right, guys, signing off. Talk to you later.